most don't realize is how you give can make a big difference in your tax outcome. If you're over 70 and a half and you're taking money out of a traditional IRA, charitable tax planning could help you give from your IRA directly without that money being counted as taxable income. That means you could lower your overall tax bill. You might also reduce what you pay for Medicare, and you might avoid having more of your Social Security taxed. Charitable tax planning gives you more control over your retirement income and lets you use required distributions for something meaningful instead of just writing a bigger check to the IRS. So let's break this down simply. A QCD, or Qualified Charitable Distribution, lets you send money straight from your IRA to a qualified charity. And when you do that, it counts toward your RMD, but it doesn't count as income on your tax return. So let's look at an example. Let's say Diane is 74 and her required minimum distribution this year is $40,000. She's also planning to donate $10,000 to charity like she does every year. Now, instead of withdrawing the full $40,000 and writing a personal check, Diane sends that $10,000 directly from her IRA to the charity she supports. It still satisfies part of her RMD, but she only pays taxes on the remaining $30,000. That's real tax savings. And if she's not itemizing deductions, which most retirees don't anymore, using a QCD is the only way that donation gives her any tax benefit at all. So who can actually use a QCD? Well, you need to be at least age 70 and a half, not just 70 and a half. You must donate from a traditional IRA, not a Roth or a 401k, and the donation has to go directly from your IRA custodian to the charity. If the money hits your bank account first, it's considered a regular withdrawal and will be taxed. Also, the charity must be a qualified 501c3 organization. That includes most nonprofits and churches, but doesn't include donor-advised funds or private foundations. You can give up to $100,000 per year this way. And if you're married and both you and your spouse have IRAs, that number doubles to $200,000. Now, here's where this gets really useful. When RMDs start at age 73 or 75, depending on when you were born, you might find yourself being forced to take more money out of your IRA than you actually need. And that extra income, it gets taxed. It might even bump you into a higher tax bracket. But by using a QCD, you can reduce how much of your RMD shows up as income that will be taxed. And because it lowers your adjusted gross income, it can also help you keep your Medicare premiums lower, reduce the amount of Social Security that gets taxed, and even limit future taxes on your investments. It's not just a giving strategy, it's a smart income strategy. A few quick pitfalls that you should avoid. First, don't take the money yourself. Always have it go straight from your IRA to the charity. Double check the organization. Make sure it's a qualified charity, not a donor-advised fund. Watch the deadlines. QCDs must be completed by December 31st to count for that tax year. Keep your records. Your IRA custodian might not label it clearly, so make sure you get written confirmation from the charity. It's a good idea to work with your financial advisor or tax professional to make sure everything is set up correctly. If you're finding this video helpful, be sure to hit the like button and subscribe to see more videos just like this. And leave a comment if you've ever used a QCD before, or if you're planning to after watching this video. QCDs help you give with intention. They help you make an impact with your money while also protecting your retirement income. If you're over age 70 or approaching retirement and want to explore how strategies like QCDs could fit into your overall plan, we'd be happy to help. You can book a complimentary retirement planning session right now at haywoodwealth.com. We'll walk you through your income needs, tax picture, and your giving goals to help you build a plan that fits your life and values. Thank you so much for watching, and I will see you in the next video. Hi, my name is Justin Haywood, founder of Haywood Wealth Management. And if you're interested in learning about how we help our clients live their retirement to the fullest, visit us at haywoodwealth.com. Thank you so much.